World Bank on its global growth forecast by nearly a third for 2022, warning that Russia's invasion of Ukraine has compounded the damage from the COVID-19 pandemic, raising the risk of global stagflation. In its Global Economic Prospects report, the World Bank said the war in Ukraine has magnified the slowdown in the global economy, which could soon be facing the painful combination of feeble growth and rising prices known as stagflation, last seen in the 1970s. The World Bank said global growth could fall to 2.1% in 2022 and 1.5% in 2023, driving per capita growth close to zero if downside risks materialized.
And when you have growth rate at the global level around 1.5%, that means you are in a very serious, severe downturn.
Ian Coase, director of World Bank's Prospects Group, warns global economic weakness could lead to geopolitical risks.
We still see supply disruptions. Because of the war, those supply disruptions.
Frito scoops, which used to be 18 ounces, are now 15.5 ounces. So have you seen anything like shrinkflation while you're at the grocery store?
Yeah, I've definitely run into situations like that. Certain products, you'll notice you're getting a little bit less, whether it's like either measured in ounces or like the actual number of items you're getting in a package is less than it was, but the price has either gone up or has stayed the same. So definitely seems like they're skimming off the top a little bit.
So how can you avoid shrinkflation? Experts say pay attention to the unit price of what you're buying. Wait to buy your favorite brands when they go on sale, and also consider buying items in bulk. Again, experts suggest budgeting monthly to help deal with the rising costs of goods. Working for you in Springfield, Christina DeMorris, 22 News.
And there you have it, the closing bell at the New York Stock Exchange. Not a great day for the stock market, with all three major U.S. stocks closing in negative territory. The Dow Jones dropped roughly 280 points.
The NASDAQ and S&P also finished in the red. The NASDAQ dipped around 0.75 percentage point and the S&P around 1 full percentage point. Emily McCormick joins us now. She is a reporter for Yahoo Finance. She wrote an article published earlier today tracking stock market updates. So, Emily, we saw those numbers. What was driving the market today?
Well, first off, thank you so much for having me. It's great to be here representing Yahoo Finance on CBS. And when we take a look at the market action over the course of the past several days to several weeks now, it really has been a variation on the similar theme here. Really, investors have been weighing signs that U.S. economic activity is starting to soften a bit from the reopening fueled surge that we saw last year, weighing signs that we're seeing these still persistently elevated inflationary pressures across the economy. And really, investors are trying to see how much that inflation is going to be weighing on consumer demand, which of course is the main driver of economic activity in the U.S. Now, of course, coupled with all of this is how the Federal Reserve is ultimately going to respond to these inflationary pressures. Now, of course, the Fed is going to be having their next policy setting meeting next week, so that's something that investors are really going to be waiting and seeing for. And of course, this Friday, when it comes to the Consumer Price Index report, that latest print on inflation, also certainly something to watch closely as well, guys.
And Emily,